But it's possibly will be boring for you.
No man, me is one type of person I is willing to relearn over certain well, not say relearn, but like to see different views because you can never learn too much.
All right. So before we get started, it's a disclaimer that this is an investment business. This is your business, not my business, and uh it's a risky business. But we'll teach you risk management and how to mitigate against loss. So take a minute to read about the disclaimer before we begin. It's also in the group as well. All right. Now let's begin. So many persons like myself didn't know about forex trading until approximately 4 or 5 years ago. Uh, sat to myself and wonder why is there Grace FX Trader, Lasco MoneyGram? You know, wonder why exactly you have so much institution in Jamaica, big brands that are doing uh, FX trading. So that prompted me to actually investigate, and boom, I found myself falling in love with forex trading. So forex trading is essentially the buying and selling of currency. Uh, for example, if someone abroad sends you money and the rate in Jamaica is 150 and they send you $10, you know that's more money versus if the rate was like 120 or $80. So what we do, we basically analyze the charts and determine the best rate, the best price to buy and sell currencies and pocket the difference. So it's one of the largest industries in the world. It's actually $5.4 trillion a day that are being transacted. 10 times larger than the stock market and the food industry. Hello, large industry. Money makes the world go around, right? Now, feel free to ask me any questions while I'm talking. Okay? Can you guys hear me?
Yeah, man, will do.
Yeah.
Yeah man.
Okay. All right. So why would you trade forex? Why wouldn't you just do a 9 to 5 job every single day? Forex market is essentially 24/7. There are like 5 sessions, and it's open 5 days a week. Uh, from my point of view, how I trade, I just trade for like an hour or two in the entire day, and there have been days where I even make my monthly pay in less than a week through learning this. Uh, Unlike the stock market, which opens like 8 o'clock NYC and closes within like 2 hours, this market opens throughout the working day. As I said before, there is no cost to actually learn forex. There are several free platforms you can go on to learn. I will share some of them with you at the end. I was approached by several persons, IML including, to purchase courses and whatever. But there's no need to do that. There is no need to spend any money to buy any courses, to buy any indicators, to buy any signals. There's none. You just need to sit down, plug your stuff, and learn. The only time you will actually spend money is when you will make that deposit to your broker and use that money to trade. And even then, it's not really a cost to you because that's the initial investment. You may be wondering how will a broker get their pay? They get their pay through commissions, swap fees, and they trade also along with us. All right, so it's a win-win situation. It's a great way to generate income. You're flexible. You don't have to work 90 hours or 80 hours for the entire week. It's just awesome, an awesome idea to get into. Now you have different types of traders. I myself am a technical trader. I use technical indicators, price actions to analyze the charts and make predictions and trade them. I also incorporate the fundamentals, just news, that is, just news. I don't really go into depth about researching the companies or researching a particular country's GDP. I just pay attention to the news. That's it. So, in layman's terms, you have technical traders and you have fundamental traders. Technical traders are those who look at the charts and trade based on certain criteria. Fundamental traders are those who look at news, GDP, the income of the country, etc. They go into depth and place trades based on those. How to get started? How do you get started trading, and what is actually needed? So you would need risk capital, that is money you can afford to lose if anything should go wrong. But nothing will go wrong because you will do paper trading. That's basically using free money, a demo account to trade your technique for approximately like 3 to 6 months until you're comfortable. Then you make that first investment. You need a broker. An example of a broker, IC Market, XM, Hot Forex. There are tons of brokers. I personally use IC Market and XM. Some people use Traders Way or Yuga's Way to trade. A broker is actually the person or the company that you will use to place the trade for you, because, as I said, you're trading currencies. So you can't take a plane from Jamaica to England to exchange your pound for US when the pound drops, right? That's just illogical. So you need a middleman to go through to do the transactions over the internet. And that's where the broker comes in. You need a strategy. See, you can't just get up and blindly place trades. You need some if then else statement to execute your trade. And most importantly, risk management, money management. So to mitigate against loss, you will need some measure in place that will prevent you from blowing your account. Now, believe it or not, you don't need to win 90% of your trades, nor 50% of your trades. If you win 30 or 40% of the time, you can still make money. And that's through money management and ROI, return on investment. I will show you the mathematical calculation behind it shortly. Okay. And this is one that I personally have some issues with. I'm just recently overcoming it. It's actually the psychology, the mindset. So you probably be in a trade and you get greedy and you enter more trades than your account can take and you're blowing your account. No patience. You just have to have a clear vision of what you want from that particular trade. Once you get it, you leave the trade. Don't even look at it again. Okay? All right. So moving on. Any questions? Can you guys hear me?
Yeah, man, I
No
can hear
questions
you.
so far. Yeah, not so far.
No question there.
Okay, awesome. So in the trading game, you will hear some lingos, some terms being thrown around. So you'll hear bull, beers, long, short, TP, SL. Those are basically terms that we use to allude to certain things in the market. So if you're going to buy a pair, you will go long. Long is the same as saying I'm going to buy. If you're trading USD JMD, that's US dollar versus Jamaican. If you're going to buy the US, you essentially you're going long. If you're going to sell, you're going short. All right. Bulls are the buyers. So if you're going to buy, yes, you're a bull. If you're going to sell, you're a bear. All right. Bullish essentially means that there's an uptrend. Bearish there's a downtrend. It's going down. Okay. There's bullish candlesticks, bearish candlesticks. If the candlestick is green, they say that it's so. If it's green, blue, or white, those are color scheme that they typically use. It's a bull candle. If it's red or black, it's a bear. Okay. Now risk, typically you'll hear they say, hey, use a 2% risk on your account, or 3% risk, or a 1 to 2 risk to reward ratio. That is, to me, the key for money management. So remember I said initially that even if you lose 60% of your trade, you still can make money, because if you have a system where you win twice the amount you lose over a period of time, essentially, even if you lose 40 to 50% of the time, you can't lose. The numbers are against or with you, I should say. So let's say you have $100 invested. Well, 100 US invested, and using a system that you only execute a trade if you win. If you win twice the amount, you see a perfect seller setup, and on that seller setup, the risk to reward is 1 to 3. So you're risking $10 to gain $30. That's 1% of your account. If you risk the $10 to gain $30, that is essentially 3 times the amount that you're getting. So over a continuous period of time, it will build up. So if you win one trade right now, that's $30 extra, right? If you lose another trade, that's just $10 instead of $20 remaining in your account. If you win another one, that's $6 profit. If you lose 2 trades, that's just $30. You still have $40 remaining. So no matter what, as long as you have a good risk to reward, essentially you can't lose. Just the only way I think that you can lose in Forex is if you're greedy and you have the wrong mindset. And this is not a get rich quick scheme. This is actually a business. We are trading alongside with the banks and the hedge funds and the big boys. All right. So as I said, bullish market up, you go long. The bears, you go short, means you're going down. All right. Now, I trade, and Jermaine can attest to this. We use price action. So essentially, we read the chart, see where the price is too high. If it's too high, we will sell it. Which is support, we will buy it, etc. All right. So price action essentially is the moving of the price. Price cannot stay at one place at the same time. I give you an example in Jamaica. If I don't know if you guys go to Coronation Market or the supermarket, if you're looking to buy a pound of cabbage and someone is selling the cabbage for $50 a pound, and you're like, no man, that's way too expensive. And you go to another vendor and it's selling it for like $30 a pound, you buy from the cheaper one, right? That means you buy at a lower price. You don't buy when the price is high. The only way you'll buy when the price is really high is if there is more demand than supply. And we'll go through this on the charts shortly. Now, to couple with price action, you'll need to learn support and resistance and trend lines to bring structure to the market. Because if I show you the chart itself, this chart itself looks like garbage. So if you look at that chart by itself, you won't have any idea what is going on. You'll need some structure to the chart. You'll need to see exactly what's going to happen and at what point in time is it going to happen. So to accomplish this, we use structure-based trading. There are tons of techniques out there to trade Forex. Personally, I find structure-based trading the easiest to both tell someone or teach and to execute, because rules are just simple. If price is at resistance and you have a pattern, then sell. That's it. So this is a chart. This is a Great Britain GBP USD chart. I'm pretty sure that the guys don't, you can see that it's really difficult to read. But I'll show you how to bring structure to the chart and how to read it and execute the trades on your trading platform. Now, support is basically like the floor for price. So once price reaches support, you look for some buy signals. Not always though, because sometimes price can blow right through support and come back to test support, and when it does that, it now becomes resistance. Resistance is the opposite. Resistance is like the ceiling. So price reaches the ceiling, it can't pass. You then look for some sell signal to go short. Remember, short equals sell, all right? Now, if price breaks the resistance becomes support. And then you can look for longs, okay? Trend line is essentially a line that shows the direction of a trend. And I'll show you how to draw the trend lines and the support and resistance lines or zones shortly. Now this is an example. So right here, this is a resistance. This is a ceiling. Pretend that you're in a house, right? You're in a house. You have the floor and the ceiling. Floor and the ceiling. You can't go through the floor, right? You can't go through the ceiling. If you go through the ceiling, then basically you have an upstairs house and you're on the ceiling and you continue going up. If you go to the ceiling becomes floor, price continues goes up. So that's a way to look at it. So price reaches resistance, there's a seller signal, bearish engulfing candle, price moves back down to support, it's at support, goes back up, resistance, goes back down. If it breaks it, like right here, come back to resistance and the resistance becomes support. You get that?
Okay.
Any questions? Hello?
Not so far. Not so far.
Okay. Now this is an example of a trend line. Now the trend line shows you where you can buy and sell the price, sell if the price is in a particular trend. Remember, trend is either up or going down. And how you will define an uptrend is if price is making higher highs and higher lows. Downtrend is the inverse. It's lower lows and lower highs. For this one, this is a low right here in up, with a higher high, with a higher low, and a higher high. As you can see, we respect this line, and you can just buy right here and go up, buy again, and continue going up. Okay. Now, before I jump to the live charts, you'll need some software on your computer and your phone to execute the trade. Now, for your phone, if you want to take trades on your phone, you will need the MT4 or MT5 app. You will get this application. It's actually available in your app store for free, but you will need to register with a broker to get an account, a live account or a demo account. So now if you can go to your phone and go to the app store and download the MetaTrader app, that is the application that they use to place trades, right? That's the app that we use to basically make money. It's called MetaTrader or MT4 or MT5. Now, the MetaTrader is essentially the trading platform. I personally don't use MetaTrader to do charts markup. I use TradingView. So let's jump into TradingView and review the live charts and predictions for this coming week. All right, so can you guys see my screen? Hello?
Yeah, I'm seeing the screen.
Yeah, I'm seeing.
Yep.
Okay, awesome. This is just the basics, because there's a lot more. We didn't get to go through major pairs, exotic pairs, and minor pairs, and a lot more stuff. But to get your toes wet, we are going to look at trading the Great Britain pound against the US dollar, right? And the platform that I'm currently on right now, it's called TradingView, tradingview.com. It's free. There is a pro version that you can pay for. I don't see the need for that, but you can use it both on your computer and your phone. This is where I go to do the chart markup, and then I'll go on my phone and use MT4, MT5 to place the trade. So, you guys remember what the term bullish and bearish means? One?
Yeah, man.
So what is it?
So bearish is when the overall price movement is going down and sorry, hold on. Mr. Bearish, right? Bearish is when the price movement is going down. Bullish is when overall price movement is going up.
Excellent. So remember, bull, like a cow, is essentially buying. Bearish is selling, going down, right? So by the look of this, look at this chart right here, from right here. Do you say this is bullish or bearish?
Bull.
From where?
Bullish or bearish?
From where?
I would say
Point what
bullish.
you're talking about.
Didn't get that. Type in the chat section. Okay. Bull, bull, bull. All right, excellent. Okay, so indeed, it is bullish, right? Now let's pretend that we didn't see that one. What's this one now? Is this bullish or bearish? Would you go long or go short right here? Seeing this structure right here. Okay, I'm gonna have 10 minutes remaining. Anyone? Bear?
Look bear.
Awesome, that's correct. So let's go through the process of doing a chart markup. I only have 10 minutes remaining. Now, to do the chart markup, I didn't introduce this to you guys, but you guys need to know time frames. Time frame is basically the time that you will look on to see the chart. This is a one-day chart. You have different time for the charts. You have 1 day, weekly, monthly, 4 hour, 1 hour. So I use price action combined with structure, combined with multiple time frame analysis and candlestick analysis to place my trades. So a day.
So I have a question.
Go
In
ahead.
terms of the time frames, are they in respective to the candles? So do the candles represent the actual time frames? So it takes
Yes.
the time frame to form a candle?
Yes. So one candle on the daily chart, this rectangle right here is essentially 1 day of price action. If I should go to the 4 hour, the same, each candle right here is 4 hours worth of price action. So to answer your question, yes. So for the next webinar, I will show you guys that if you see like an engulfing candle on the daily chart, it's essentially a double bottom on the 4 hour or the 1 hour chart. So we'll see correlations. So on the daily, all right, let's go and place some support and resistance line on the daily. Now support and resistance is, remember, the floor and the ceiling. That's where price stops. It's like right here on the line. Support would be right here. I will show you guys how to place these in the next webinar, times against us. Next one will essentially be right here. So you're looking for turning points where the price does turn against the trend, right? Now, one is also right here. And if you remember, we use trend line also. So we would say right here to here is a trend line, right? And we could put a trend line right here to up here. So just by doing that, we can see that, hey, price needs to come back to this area for you to actually execute a buy. So if the price comes here and gives you a candlestick that is synonymous with buying, you will go long. If it breaks it, do a retest and gives you an entry reason, you go short. So for next week, the zone that I'm looking on, I should say, is essentially right here. So once price pulls back into this direction and the price is over here, the side 1.29875, we'll get into psychological numbers, the next meeting, and all the other stuff. So once price pulls into this zone right here, we're looking for a reason to buy. If price doesn't give us a reason to buy, and it breaks the line, then we're looking for a reason to sell. Now, if we should look for a reason to go short, right? And it gives us the candle pattern right here. Sorry, that's wrong. It gives us the entry reason right here. We'll look for a 1 to 2 risk to reward. Now we'll show you how to calculate that and where to put your stop loss and you take profit in the next webinar. Okay? So ideally, for this kind of setup, for next week, we're expecting the price for GBP USD to come into this zone right here, give us an entry reason, and then we can buy back to this resistance right here. You guys understand how I get that?
I'm going to check on my charts and see how I had my setup.
Okay.
Sorry,
go ahead.
Let's see.
Any questions?
So let me summarize this. So what you really do is you draw a line where price frequently rejects from, or where price usually reacts from, and you use that as a like a level of support, or a region where you expect the price to actually go a certain direction, and use it as a limit to where you can say, okay, if it breaks this point, it should go below that point. If it doesn't break that point, I mean, it may go back in the opposite direction.
Yeah. And there are other factors such as Fibonacci levels, psychological levels, news. For example, if there should be a news event tomorrow or today that impact GBP, the price will fall.
Even bank levels included in it.
All right, and there are several patterns that we can use to identify if a price is going to reverse or continue going up. In the Telegram group, I sent some PDF. Did anyone get it? Did you guys go through it?
I got it, and I've actually started to go through some, but I intend to complete all by next week.
Okay, so there is one PDF called Candlesticks. That one shows you all of the candlestick patterns that we'll use for entry. I personally use the candlesticks as well as the lower time frame. So for right here, what I'll do, I wouldn't necessarily enter the trade on the daily chart. I'll drop to the 1 hour or the 15-minute and wait for the price to come all the way down here to buy. So price is expected to continue dropping until it reach this region. Then we can look for buys. Any questions?
No, not right now.
Okay. Ms. Martin?
I have one more question. So you
No, I
said
don't have a question.
So you have okay, so you say news affects the currencies, right? So if you were to go back and say US, we know that Trump did a thing and killed some Islamic leader, right? Did that affect the price? Could we go back and see the time and see if it actually affected the price, whether or not US fell or rose due to that event?
Yeah.
Yes, you can. And
yes,
the thing about news is it typically only affects price on the lower time frame. So the lower you are on the time frame, below the 4 hour, news is a factor for you. Because the move on the lower time frame is much smaller. And the larger time frame, news isn't really a factor. Because if you go on a 1 week time frame and look at where Brexit was announced, the move isn't as unanimous as if you were